What's going on, guys? It's Matt here. We're doing a video here today about support and resistance zones and how to draw them. A lot of people get mixed up and kind of can't read the candlestick patterns and understand where supply and demand, support and resistance zones are. So what I'm going to do is show you. So we're starting off here with USD CAD, which is US dollar to the Canadian dollar. So what we're going to do is we're going to get ourselves a horizontal line. We're going to draw at the top of the candles. So the candlestick pattern's up here. This is about as high as it goes. Draw another one here. Here's your zone. What I like to do is I'll draw rectangles because it's more of a zone than a line. A lot of people get it confused that, oh, it's supposed to be just a line. No, it's a zone. It can fluctuate between these areas. That way you don't hit a stop loss by just one line. It's kind of an area. So that's important to know. We're going to draw a couple more lines here at points where you see major pullbacks. I like to change the colors on them just to make sure that you understand where they are and that they are different areas on the chart. We're going to put another one here, but that one's going to be red just because it's at the bottom. I like the ones towards the bottom and the tops to be red. The middle's a different color. It just helps me out a little bit, but you can use whatever color you want. And we're going to draw another zone here. So I'm going to just type some things out here just so we can all understand where it is. So you got a support zone here, and we're going to put that inside our support zone. So this is our support zone right here. We're going to clone this just for ease, and we're going to call this one resistance zone. Okay, so now we have clear support and resistance zones, right? So we know the price is going to move between here right now. We don't want to really trade in the middle. That's kind of where you get lost. If you would have entered here, you don't know if it's going to go up, you don't know if it's going to go down. But when you hit support and resistance points, that's where you can kind of have a better probability of where the trade's going to go. If this were me right now, and actually this did happen today, because of NFP, non-farmers payroll report, we took sell stops right here. When non-farmers payroll came out, we entered, I'll show you here, we entered right here with a stop loss at the top of the resistance zone because we know it's not really going to go higher than that. There's a very low probability it is. With take profits about halfway. You could put it here because here you had a line of really resistance here. This was where it resisted to go up. So you're looking at a resistance zone. But you also have another resistance zone, or support zone, I should say, right here. So we can put another line right here. Make this one yellow so you can see the difference. So you can have multiple take profits here. You can have one here because it may reject there. You can have another here because it may reject there. But what's important is that we've drawn our support and our resistance zones. This is really key and fundamentally important to know because if you can do this and see visually support and resistance zones, you can do this on any chart. And this is not just for Forex trading. I mean, you could look at Tesla and draw these. You could look at Apple and draw these. You can really look at any kind of chart or any stock, commodity, whatever you want to trade, and look at this. So the good thing about this as well, when it comes to planning out your charts, is that you have a visual and a psychological level. This relates to price action trading. So this is a psychological level as well. Psychologically, when people see this level, what they're going to say is, okay, there's some resistance here. Right here. Also right here. Also right here. Also right here. So what are we going to do? Well, if you start to get some selling volume or some buying volume at a resistance like you did here, just dropped. Here, we kind of stuttered along the resistance zone. Long wicks indicating there was selling pressure. It tried to go, but it kept resisting. And then finally, you got a candle break below the resistance zone, and it closed below. That, to me, is a really strong entrance point. What that means is that now we can take our entry. So if I was trading over here, I would enter right there at, what is that, 0.36610. I would enter right here off of maybe a little bit lower because you had this candle close lower than the above candle that was resisted the zone, couldn't get through it, so it dropped down. So if you would have taken a trade right here and held for a couple hours, because we're on the 1 hour time frame, what you're looking at essentially is say you held it down here, that's best case, but first profit, you're looking at 53.9 pips. Second profit, you're looking at 115 pips. If you went all the way down to our final bottom support zone, you're looking at 182 pips. Now, obviously, it depends what your account size is. If your account size is larger than others and what kind of leverage you're using, you'll make more money. But regardless, you're going to make money on trades like this. This is the fundamentals that you need to understand to learn how to trade, because if you can't draw support and resistance zones, you're just buying and selling really wherever you want with no rhyme or reason. This is the strategy that I use consistently. This is the strategy that I've been profitable on. I've been doing this for over 8 years now, and I found this to be extremely, extremely useful. If you guys like what you saw here today, please like, subscribe, comment to my channel. It helps the algorithm. We're looking to grow and we're looking to help people. Thanks again for watching, and I really appreciate it.